Hello and welcome everyone to this week's COT Review. I'm Thomas from COTBase.com. Welcome to this week's Commitments of Traders Review. Today we're going to have a look at the 19th COT report of this year, and as usual we're going to start off with the changes in commercials positions. Here we go. You can see we've got British Pound on top of our list with a 44% change in commercials positions. Huge change if you look at the charts. This is actually the largest change, whether we're talking about a bearish or bullish change. Large speculators, of course, have also changed dramatically their positions by 46%. Huge changes over there. Small speculators are net long at this point, which on this, at least this 52 weeks range, seems to be a significant positioning for them. Jumping to the 5-year chart, of course, this change signal was unquestionably a bearish COT change signal, if that wasn't clear to anyone. But jumping to the 5-year chart, you can see that with this large change in traders' positions, we've also jumped to a 59 report extreme in case of commercials and 44 in case of large speculators. Now, of course, this is still way far from those all-time or close to all-time bearish COT extreme levels. We're still much closer to bullish extreme levels. You may see that we're still seeing the effect of that stress bubble bursting and pushing prices higher. Now, the big question, of course, whether or not this this downtrend that we have in the British pound would continue, or we can actually break those levels. Of course, this is the question for the next couple of months. Nevertheless, this is what we can see right now is that the bearish COT change signal suggests that prices will decline in the near future, and the extreme says that, well, hey, you know, we had this bullish extreme, still not that far away. Prices may rebound a little bit in this rally, but the chances are that this rally would continue. At least that's what the report suggests. Now, of course, if it does not continue, we would expect to see the extreme to start widening again towards the bullish side of the market. Let's move on and have a look at silver with a 36% change in commercials positions. This is the second market we're analyzing today. Here you see the change being larger than average, but not as large as last week. And you can see that the one last week was not an effective signal. So, of course, I've told you this many times earlier in previous reviews that COT change signals could have an effect on the market in the near term, but not necessarily. You have to be more cautious over there, and of course, look at other aspects of your decision-making process. So this is a bullish COT change signal. We have seen a bit of a rise in prices, so maybe not the best signal. Let's jump over to the 5-year chart and see what that shows us, what the extreme is currently in the market. And you may see we had this bearish COT extreme, after which you can see a drop in prices. And I don't really see anything against it. So, I mean, this 56 report extreme, relative extreme, of course, can be considered a bullish one in relative terms. But if you look at the broader picture, you should be cautious with this bullish extreme signal. So we're still more closer to the bearish one right now, in my opinion. The Mexican peso is our next market with a 33 report extreme. I'm sorry, 33% change in traders' positions, 34 in large speculators, 33 in commercials. This is, as you may see on the chart, the largest change that we had in this past 52 weeks. So huge changes amongst currencies right now. You may see also Australian dollar and Canadian dollar following. So this change signal is coming after a few days of rally in the market. So that suggests we may see a decline coming early next week. And if we jump to the 5-year chart, you may see that with this dramatic change in traders' positions, we suddenly moved to a 144 report extreme in case of commercials, and the exact same report extreme in case of large speculators, which I'm just showing you right now where you can see that. So for that time, we haven't had such a extreme in the market. This is a very large, well, very large. If you look at the 5-year chart, you can see that we had even greater extremes in the past, talking about 2012, early 2013. We're not at those levels. You can see that they're still about, well, I would say about 75,000 contracts in case of commercials, and roughly the same 75,000 contracts for large speculators to reach those levels. But still, it's we haven't had that extreme for almost 3 years now, which suggests that maybe this is a good opportunity to go and do your trend following trade and say, well, hey, we had this little rebound in this downtrend. We've seen a bit higher prices, but the longer term trend is pointing downwards, and you're going to follow that. So if you're doing that kind of trade, then this may support your decision. Let's move on and have a look at large speculators, COT Extreme. We've got the Canadian dollar on top of a list with an all-time in large speculators and all-time in commercials as well. Here we go. Of course, this is a bullish COT Extreme signal. Let's have a look at the chart and see what happened to the market when we had significant bullish extremes. You may see the previous one was a good signal, pushing prices higher. The one before in mid-2015 was not the most effective signal. You can see that on the chart. And here we had possibly you can consider this one a good signal, but eventually the rally did not last too long. And the one before, well, again, not a significant trend changer extreme, I would say. So you have to keep that in mind and see that the main trend is definitely downwards. And if you choose to go long based on that signal, you should be prepared for a maybe not that long lasting rally. With the exception of this extreme, you may see we could easily see just a bit of a bounce in prices and then see the continuation of that decline. Of course, depending on what time frame you're trading, this can still be a good signal for you. Moving on to platinum, and jumping to the 5-year chart, we can see what this 406 report extreme means in case of large speculators, 405 in case of commercials. Again, this is a bullish COT extreme signal coming at a point in time when you have some good support levels. Maybe this one would be a smaller risk reward trade, and that one could be a larger risk reward, and that may be a smaller risk reward trade, depending on where you what your risk management system is. So that's that. Let's jump to our last market, RBOB Gasoline, 348 report extreme in commercials and large speculators also. Yeah, so we have that over there. This is a bullish extreme commercials. Commercials, you may see them over here, 348, large speculators 348, and small speculators at a 38 report extreme. But if you look at the chart, that is a significant extreme for them. So they're very pessimistic about the market. And we have that bullish COT extreme signal. So this may push prices higher. That's that. Okay, that is going to be all for this review. You may look at other COT charts on our COT charts page, and of course you can do a more in-depth and detailed COT analysis if you wish on this page, where you can add other great functions to the table. You can of course look at all COT report types, other data types, look at older reports, and of course you can add other great functions like long-term trend, volume and open interest scores, the COT index to the table. I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.